The Agenda with Steve Paikin is made possible through generous philanthropic contributions from viewers like you. Thank you for supporting TVO's journalism.
Tonight, with the price of gold at a record high, is Ontario missing a golden opportunity? Then, just how well served are Canadians by their banks? That's next on The Agenda. Canada is the fourth highest producer of gold in the world, behind Russia, China, and Australia. Almost 50% of Canada's gold is mined right here in Ontario, and the price is at a record high. But it's become harder for companies to raise money for exploration and new discoveries, and some new regulatory changes have made building new mines in Canada tougher. So, does gold hold the same allure that it used to? Let's ask. In Kirkland Lake, Ontario, there's the mayor, Stacey White. And joining us here in studio, Sean Boyd, chair of the board and former CEO of Agnico Eagle Mines Limited. Michael Fox, CEO of Indigenous Community Engagement and a member of Winoosk First Nation near the shores of Hudson Bay. And Bruce Tatters, who's the CEO of Red Cloud Securities. And we are delighted to welcome you three here to our studio. And Your Worship, good to have you on the line from Kirkland Lake, Ontario. I want to start by just showing, here's what it's all about, folks. That's what it's all about. That's a little chunk of gold. That's from Agnico's mine in where?
Quebec, the
That's
LaRonde
in Quebec.
mine.
The LaRonde mine.
Yes.
How deep did you have to go down to pluck this out?
Well, that mine, we're currently mining down at 3.4 kilometers underground.
You've got to be pretty brave to go that far down into the earth,
The
right?
miners have done an incredible job there.
Wow, wow. Okay. We are having this conversation in part because of the numbers I'm about to share. Sheldon, if you would, bring this graphic up. Because, and for those listening on podcast, I'll just read the chart that we've got going here. We're tracking the price of gold since 2020 to today, and it is currently trading at record levels, north of $2,600 an ounce, and that's in American funds. So it's up there. Sean, starting with you, what factors are pushing the price of gold so high these days?
There's been a lot of central bank buying over the last 2 to 3 years, largely from China. So gold's reacting to that, so good demand. Supply is constrained. It's not growing dramatically even at these high prices. As you mentioned in the top, it's tough. It's a tough business. It's tough to find quantities of gold in economic quantities where you can actually build a mine. So the supply-demand fundamentals are really strong, and it's likely going to continue to go higher.
Well, I'm going to follow up with Bruce on that. It's 2,600 US an ounce right now. Can it sustain that in your view?
Well, yes, because the very interesting thing about gold right now, Sean was absolutely correct that central banks around the world, particularly non-G7 countries, have been accumulating it a lot. But a lot of consumers in China, retail people, have been a big reason for this as well. There's been a lot of trouble in the Chinese economy. There's been a lack of faith in their real estate with some of their major real estate companies collapsing, and there's not been a lot of faith in the Xi government and in some of the policies, and so they've been reaching out for gold for safety.
We're going to look
at part of the world.
Gotcha. We're going to look at another chart now. Sheldon, if you would bring this other one up. This is the production of gold in Canada, province by province. And we're looking at a pie chart again for those listening on podcast and who can't see this chart. 2% in Manitoba, 2% in the Yukon, 10% in BC, 26% in Quebec, a good chunk, 14% elsewhere, 46% of Canadian gold production is done in the province of Ontario, almost half. And here's another chart we're going to show as well. This is Ontario's producing gold mines, and there are 17 of them, and they are, as you might suspect, primarily in Northern Ontario around Timmins, Kirkland Lake, and Red Lake, which is north of Thunder Bay. That is way up there north of Thunder Bay. And Sean, let me go back to you here. How many gold mines does Agnico Eagle operate in Ontario?
We operate the Kirkland Lake Macassa mine, which the mayor would be familiar with, and the Detour Lake mine. And the Detour Lake is a sizable mine. It's in the top 10 in the world. And we also have the Canadian Malartic mine across the border in Quebec, which is also top 10.
I'm sure the mayor is well aware of it, which is why I'm going to ask her how important it is to her economy in Kirkland Lake.
Well, absolutely. We've always been a gold-based economy over the last century, and we are very, very fortunate. Not only do we have that Macassa mine site within our borders, of course, we have Alamos Gold over in Matach and the promise of Upper Beaver as well, just down the highway on the other side.
And how important is it to you that gold continues to trade at $2,600 an ounce U.S. and more?
Absolutely. So we definitely are keenly aware that that is good news for the local economy and the surrounding areas.
Michael, let's go to you. How many First Nations residents work in this sector in the province or country?
Well, that's a good question. It's probably the highest proportionally hired by the mining industry compared to other sectors. I think those areas you mentioned, there's a high percentage of Indigenous communities involved in the mining operations, either in the training or in the operations as employment or in the business.
And if they're not working actually in the business itself, maybe in spin-off industries, what are they doing?
So they could be trucking, they could be providing supplies, janitorial materials. There's a whole supply chain that these mining operations provide opportunities for the Indigenous communities.
Is it working?
It's totally working. I would argue that over time, there's been an evolution of Indigenous participation to Indigenous partnerships to Indigenous proponents within the sector.
Bruce, coming back to you, if gold is trading so high and people all over the world want it, why is the funding environment so problematic right now?
Well, it's a very complicated question. There's probably several reasons. One is the nature of the gold rally to this point has largely been an Asian and non-Western society gold run. And they've been buying gold itself rather than the stocks like Western people would. If we got excited about gold over in the Western world here, we tend to buy the stocks and the commodity. Over in the East, they tend to just buy the commodity. So there's not been, because of the gold rally, it's been principally a non-G7 gold rally is part of the reason. There's also been some structural problems in the North American and in the funding markets to do with a whole host of reasons that have made it much tougher. Larger producing gold companies haven't done as much exploring. Pension funds, we were fortunate at Red Cloud to put Frank Juster and Pierre Lassonde on a trip across the country talking about the lack of investment by the Canadian pension funds and others in the Canadian mining space.
Did that help?
Well, it got a message out. Help takes time. And so, the Canadian pension funds have less than 3%, or have only 3% of their assets invested in Canada, and most of them invested abroad, and don't actually have mining people at their funds. So if gold gets excited, there's no one to actually analyze and decide to buy anything in this country.
Sean, what would you add to that in terms of why the funding environment seems so problematic right now?
It's a tough business. So in 40 years, I've seen the gold price. When I became CEO in 1998, the gold price was $260. Here it is up 10 times. So it's nice that we're here. It's nice that it looks like it's going to stay at a strong price, but it's a long-term business. It's volatile. It's much more difficult than mining copper and nickel because the mine lives tend to be shorter. So you have to take a long-term view. The returns haven't been there for the big companies, but we're an interesting case study in investors and how to invest over time. Our biggest shareholders are non-Canadian. I can pick up the phone today and call BlackRock in London or Fidelity in Boston, where I can't really pick up the phone and call someone at a Canadian pension plan and say, look, this is what we're thinking.
Why not?
It's a challenge because I think it's in my view, it's their investing model, whereas the big non-Canadian players work on what we've seen as establishing a relationship, investing in good management teams with good businesses over time, and taking that long-term view and trading around a core position. I haven't seen that from the Canadian pension funds, but that's besides the point. I think the point is that we're at a price level now where the returns are there. it's hard to repeat what Agnico's done from a junior to multi-mines to being the biggest market cap mining company in Canada, but you've got to keep the drills turning. And the challenge is to get the funds. We're spending $300 million US a year on exploration, but we still rely on juniors. We've got a $400 to $500 million investment a portfolio of junior mining companies. So again, it's long-term, working with communities, building relationships, but the future's bright, I think. Let's challenge.
Hold up on that for a second. We're going to get to the future. One more quick one for you. The name of your company, Agnico. Explain.
Agnico, AG, chemical symbol for silver, nickel, cobalt. Started in 1957 in the small town of Cobalt with an amalgamation of 4 tiny silver producers. So that's our history in Ontario. Big story around mining. 100 years ago, Cobalt was the place to be. Then it was Timmins. So Canada's got a huge opportunity here if we pull all the partners together to really build this business.
Your Worship, can you build on that? How does Kirkland Lake see the future if this thing really continues to fly?
You know, absolutely. Agnico Eagle has been an extremely good community partner. We're right now working on a partnership towards new subdevelopment. So definitely with their help, we know that Kirkland Lake is going to expand, well into 2030.
Do you have any idea what percentage of the people who live in Kirkland Lake would either directly or indirectly owe their living to the mining business?
So definitely, looking at numbers of employment, Agnico Eagle directly employs almost 1,000 people. So that is, when you have a population of only 8,000 within your community, that is a large chunk of employment. We do know that people are traveling because we simply didn't have the housing available to locate these people within our community. But we are working on that, considerably right now with the help of Agnico Eagle and the Ontario government as well.
And in terms of the economic development that these mines create and the taxes that they pay, what does that enable your community to do in terms of public works and public goods that it might otherwise not be able to do?
Well, absolutely. With this, there's a Housing Enabling Water Systems Fund grant that's coming out of the province. And it was with the assistance of Agnico Eagle and Alamos Gold that we were able to get the engineering portion done to get to that stage for that grant process. And with that, we are going to be able to bring our infrastructure up to date to allow for massive subdevelopments. And that is so critical because we all know without funding dollars for infrastructure, a community simply cannot expand.
Michael, maybe you could build on that answer in terms of what standard of living can First Nations now enjoy that, if the mining sector isn't there, might otherwise not be the case?
Yeah, it depends where you are in Ontario. So, in the existing mining camps, I think the indigenous communities and organizations, they have a pretty high level of conceptual sophistication about the sector, and they're commercially involved. And in other areas, it may be new, like in certain treaty areas, probably like Treaty 3, there wasn't many mining.
Which is where? Treaty 3 is where?
Is northwestern Ontario.
Okay.
So you had like New Gold was probably the new mine that happened around Fort Francis, and so that cluster of communities had to get on a multiple steep learning curve about what mining is and everything. So, so it takes time, to build capacity and build the confidence and have the capital to deploy to get involved in these sectors.
Let me ask you about something else. This is an important principle in mining. It is called the duty to consult. What is that? Yeah,
so I would expand on that as duty to consult and accommodate. So I think it's part of the legal framework in Canada based on the constitutional framework we have here, and it's part of the honor of the Crown. So any decision the Crown has to make when it comes to touching Aboriginal treaty rights, it has to consideration the Indigenous communities might be impacted on that. So it's, I think the exploration and mining sector has been ahead of the curve, I think, on that, particularly the associations, in preparing its members to get involved and creating partnerships, creating project agreements associated with that.
I'm going to go to Sean now. He calls it a duty to consult and accommodate. Are you prepared to add those two extra words?
Yes, and I think that's the way we've we've managed our business. And I think it really was driven home when we went to Nunavut the first time back in 2007, where we weren't really sure what to expect. And we went to the community of Baker Lake, and we left after 3 days, and we said, boy, we can do business here, because we weren't judged as miners or from the south. The conversation was, how could we partner? And this also ties into the question around the perception from investors about the industry. The industry has to do a much better job explaining the benefits, explaining what we're talking about here. And I've spent a lot of time in Ottawa in the last year trying to articulate the opportunity set that we see as miners, people that are there every single day doing this. And it's not just mine building. If we do this properly, and it's not sort of standing up and saying, oh, by the way, we're going to build the Upper Beaver project in Kirkland Lake or the Hope Bay project in Nunavut, and you're going to get all these spin-off benefits. No, it's when you're announcing that, it's to talk about the impact that mines are having from the context of building community. And in some parts of Canada, it's building the nation. And we're trying to connect these 3 points now: mine building, community building, and nation building, and doing it at the provincial level and doing it at the federal level, because we're good at mining in Canada. But we're really good at mining when we're working together and we make sure everybody's participating. And we've been at the forefront of that, and we wouldn't be where we are in terms of the size of our company and the quality of our business if we didn't establish the partnerships with the communities and the employees.
Let me get Bruce on that as well. There's a duty to consult. You heard Michael call it a duty to consult and accommodate. Do you think the mining sector does both?
I think it's been an evolution, and I would suggest to you that if you were to look back 25, 30 years ago, to generalize is always very difficult, because there are some really good actors and there are some not so good actors at any given point in time. But I would generally make the comment that if you look over time, the mining community has done a really good job of pulling up its bootstraps, whether you're talking about large producers like Agnico or even the smaller explorer and developer companies out there. They are far more mindful of communities, far more mindful of engagement today than I would have suggested 30 years ago. So I think it's there, and I think Sean's right. I think the advocacy for the mining industry to the general public and the benefits to Canada is probably the last frontier that we really need to do a better job with.
And sorry, can I add? I think it's mindset. So when we went to Nunavut, we were saying to ourselves as we went up discussing it, remember, we're visitors. We're visitors. And if we conduct ourselves like visitors, then this is going to be a successful relationship over the long term. And I think that's the way you need to sort of look at it. And if you look at it from that perspective and start from square one as what are we going to do and how are we going to do it together, you really get the benefit of the mining, the higher gold price, the skills. And it's not just a job. It's an opportunity for a career when you look at these communities and you can see it in the young people. There's lots of benefits here, and that's one of the best parts about our job, is we can go into parts of the country where sometimes there's not a lot of opportunity, and we can bring it there if we do mine building correctly.
I want to get Her Worship the Mayor on this as well. The duty to not just consult, but accommodate. What does that look like on the ground where you are?
You know what? You can see it in when Mr. Boyd said he builds community. I absolutely support that. Without, taxation is kind of something that we have to do, but community partners like the mining industry willfully add to their community. They do these investments. They've partnered with the local hospital. They've actually donated to the Children's Department refresh of our local library. They support our local museum because it's based in Sir Harry Oaks and mining. When they speak about their investments, it's not only in their own business, it's in their surrounding communities. And I really do think they have a unique position to not add only to the economy, but to the societies that support these mines as well.
Mayor White, what do you do when you want something and they don't want to do it? How do you resolve that?
You know what? I'm going to touch wood on this one and say so far, so good. They have been excellent community partners. I think we're on this same side here. They know that they need to bring people to Kirkland Lake. to support their business, and we want people to come to Kirkland Lake so we can, be another 100 years in our community supporting local industries like the mining sector.
That is a good point, Sean. These are not businesses that tend to show up and leave a year or two later. You're in for the long haul in this business, aren't you?
If we do things properly.
Yeah.
And so I go back to our mission statement, which is to generate above average returns for our shareholders, make it a great place to work for our employees, and to uplift our communities and be major contributors to communities. If we fail in one of those three areas, we're not successful.
There's another part of the mission, I think, Michael, and that is the role that all of this plays in reconciliation, which is a huge job in this country right now. What role do you see mining playing in that?
Yeah, that's a pretty good question.
That's why I asked it.
Yes. If you reframed, I think, the sector, in the past 20 years since the first Supreme Court decision in 2024, there's been an evolution, and I would say that it may not have been called reconciliation, but it's reconciling the interests, of the mining companies and the communities that are impacted, and that manifests through agreements. So you may have early stage agreements like exploration agreements, later on more substantive agreements around impact benefits agreements. Those kind of structured the relationships and papered those relationships and the activities around those mines and development programs. And so looking back and with reconciliation today, you look back and say, wow, this sector has been doing it for 20 years since that. So I've been part of that. I've actually been proud of the success, not just in Ontario, but across Canada.
Bruce, can I get you on that as well? In as much as if you say to a company, what's your mission? Well, our mission is to make money and return a good dollar to shareholders. You often don't hear the word reconciliation in a mission statement. Is it really part of this sector's bones?
Well, I think the chairman of Agnico would probably even be a better answer for this. But what I would suggest is that when you think of shareholders solely and you don't think of other stakeholders whenever you're involved in any one of these types of businesses, whether you're exploring, whether you're developing, whether you got a construction project, the success and the longevity that you're seeking as a business for your shareholders is better served when all of the stakeholders and all of the agreements and things that we talk about take place.
Is reconciliation actually fundamental to your mission statement?
Yes, it is, and we've just put out a reconciliation report, and it's wrapped into sort of how we think. And it's around opportunity, and we see it as we move northward. That's where the opportunity set is. And when we move northward, we see lack of opportunity, and we see social infrastructure that's not up to the standards that we expect in the south. And so, as I've said earlier, I've been in the last year in Ottawa, sort of explaining. It's not just ports we need. Agnico doesn't need ports. We can build our own roads. We can build our own physical infrastructure. What we need is government investment in social infrastructure in the communities.
What's that mean, social infrastructure?
Food security, housing, medical facilities that are at par with what we have here. We find in the far north, when we want to open up opportunities to get a trade, that a grade 12 graduate in the far north doesn't really have grade 12 skills. We've got to upgrade them. So there's a failure in the education system. So it's about how do you create the foundation so that people in the north have the same opportunity set as people in the south. And it's really education. And we've been on record as saying, look, we'll put up the first $10 million for a university of Nunavut. So we're getting beyond Ontario, and we're trying to generate interest from other levels of government, because and the pushback we get is, well, that's small. Why don't you just go to a college and everything? And we said, look, start small. But the message we're sending is a message of hope to the young people in those communities, that maybe they can get a university degree and stay at home. So there's lots of things embedded in this. It's complicated, but it starts from, as the mayor said, we're more than miners. When things happen in the community, we have more capacity than governments have. When the water system went down in Iqaluit, the next day we had 60,000 bottles of water delivered to Iqaluit on one of our aircraft. So we can respond quickly. So you're not doing that if you're in for the quick hit because gold's at 2,600. You're there for multi-decades. We can be anywhere in the world, anywhere. We have those skills. 3/4 of our business is in Canada. Why?
Let me ask the mayor about that as well. It has been said that one of the biggest exports from Northern Ontario, either to the rest of the province or country, are young people. What is mining doing to reverse that?
So definitely we are seeing trends of our youth staying. Of course, the opportunities for education in the north. We are fortunate that we have a campus of Northern College within our community as well. So we need to support those specific sectors in our college courses. And I think it's brilliant that they're thinking about how we can educate our own people. Because, living in the north, Kirkland Lake isn't all that north, contrary to popular belief. However, it is a way of life up here. We choose to live a simpler, quieter, closer to nature life. And, after COVID, we had seen an influx of people come because they were searching for that way of life as well. So the idea of supporting our youth to stay within our communities rather than to go into the south, I think that's a brilliant first step, and I would support that any way we can.
And following up, Your Worship, you heard Sean talk about the fact that he's spending more time in Ottawa trying to, in some respect, educate politicians and public servants about some of the softer, what did you call them, the soft?
The social infrastructure.
Social infrastructure, the social infrastructure that needs building. Perhaps you're doing that at Queen's Park as well. What kind of reception do you get for that message?
Absolutely. So we're very fortunate, Kirkland Lake, because we're a larger northern municipality. We do travel down to conferences like AMO, FONOM, etc. So I do have those face-to-face meetings with ministers, and they are very open to listen to our northern municipality and their leaders, because they recognize that a lot of our resources are coming from the north, and they need to listen to the municipalities where these mines are located.
And one more, the Minister of Mines in Ontario is the MPP for Timmins, which isn't that far from where you are. I want to know what kind of listener he is.
He is excellent. He's a former mayor as well of Timmins. So you know what? He was in the thick of it right from the beginning. So he is very, very supportive of not only Timmins, which is, his near and dear to his heart, but the entire northern community. So he has on the ground experience, and he is very, very supportive, especially of Kirkland Lake and the surrounding area.
Michael, I want to put the focus back on Indigenous communities here, and it's no secret that there's a split, I think it's fair to say, in many First Nations in this province between those who have mining possibilities in their areas and those who don't. And those who do are much more bullish on mining than those who don't. How are you dealing with that split?
Well, I think it depends on where you are and what the history is. There's, sometimes you're dealing with legacy issues that before the Supreme Court decisions and the Constitution actually existed. So sometimes you have to deal with those legacy issues prior to any new undertaking in the area. So there are more pro-mining communities. I would call them pro-opportunity communities. And then you have others that are still dealing with those legacy issues.
And therefore, are they not supportive of the mining sector?
I think I would say it's a minority. If you look, Natural Resource Canada has a website called it's called Indigenous Communities and Agreements. So it's an interactive map, and they update it every so often. But it traces the number of agreements across Canada, and I think Ontario has the most agreements of all the jurisdictions in Canada. So if that's an indicator of the majority of First Nations involved in the sector, and I think it is a small minority that really don't want any type of development in their area.
Mayor White, coming back to you, I want you to discuss, if you would, here's the thing. Everybody's thrilled that you're doing well and that the revenues coming in because of mining are allowing you to do certain things that you might otherwise not be able to do. However, when the price of gold, if and when in the future it goes back down, I don't have to tell you about boom-bust cycles in Northern Ontario cities, and I know you don't want to be 100% dependent on mining in order to keep the lights on up there. In which case, how do you deal with the need to diversify whatever's happening in Kirkland Lake so that you're not so dependent on mining?
So I think, the success of the mines actually is a really strong selling point to other businesses locating to our area. Over the last few years, we've had FedEx facilities move in. We've sold property to Char Technologies, which is a biomass outfit. We have also, just this past year, started a development. Keepers of the Circle will be building a modular home building facility out on Archers Drive, which is our industrial area. So we're keenly aware that, we can't solely depend on the mining or the forestry sectors to support us. We are a century-old community. We have been through that boom and bust cycle, but we are aware that, without diversification, without those indirect industries, it can be very difficult to continue and to be sustainable. So sustainable could mean that we stay at 8,000 to 10,000. We are perfectly fine with that, but we want to make sure that our people will be able to stay for years to come.
Sean, how do you deal with that in your negotiations with smaller communities, for example, when they say, we appreciate what you're doing here, but we're also aware that you're not going to be here forever, and the north of the country is littered with communities that used to be really significant and now aren't, because eventually the mine closes and people leave. What do you do about that?
Well, part of it's just how we think about the business, and it gets back to investing in exploration. So the Macassa mine's been running for decades, and it's another deep mine. And so the key is to keep those drills turning. On top of Macassa, we have the Upper Beaver project, which has been known for decades. These things take time. We've had mines which we've taken 30 to 40 years to figure out, but it's the ability to be patient, and you can be patient when you have a strong sort of fundamental underlying business, and a lot of it's experience. So we've managed through gold prices at $260 at our company. We have people that were there when gold was $260, so we know how to do it when things turn down. And so you've got to make sure you put things aside for a rainy day, and we've done that successfully over 6+ decades, so we'll continue to do that. But it's not easy, and that's when you build up those relationships so that when times are tough, you're actually counting on each other to help sort of weather those difficult periods.
Bruce, I want you to talk to us about ownership and who owns and why or whether it's important that Canadians own these businesses. And I ask because, of course, if you go to Sudbury, Inco is now no longer a Canadian-owned company. Falconbridge is now no longer a Canadian-owned company. Osisko, I gather, mining, no longer a Canadian-owned company. Is it important that we keep a Canadian-owned and operated sector here going?
Well, if you think about, you talked about communities up in the north and their dependence on mining. But what I would suggest to you is if you broaden out the conversation and you talk about mining and its importance in Ontario and in Canada, think about head offices of all of those businesses that you described that have left, that used accounting firms, legal firms, and other types of support firms, and the jobs that were created in those related industries. The actual trickle-on economic effect is way larger than the straight number of jobs for one of those head offices. So I do think that we've been very short-sighted in Canada when we've thought about, it's difficult because, you don't want to block something when you don't have a good alternative yourself. I think this is more systemic and at the roots of how we're governed, whether or not from a top level down, the importance is there from the mindset of the politicians.
Yeah, Sean, I was going to ask you about that too, because, I remember when Vale bought Inco, and suddenly head office is now no longer in Sudbury or Toronto, it's in Brazil.
Yeah.
So we lost something there. Why wasn't Inco buying up other mining companies around the world and acting like a
Exactly.
big player as opposed to being bought out themselves?
Exactly. Missed opportunity. So we look around at BHP and Rio Tinto, major diversified mining companies, and everybody talking about the need for critical metals. So we miss that opportunity as Canadians. We had everything. We had the ability to raise capital. We're right next to the biggest capital market in the world in the U.S. We had all the skills. We had the history. We missed that opportunity. And it's not just Inco, Falconbridge, Noranda, Alcan, Goldcorp's gone now. And so, yes, we can sort of look back and say, well, we missed it. It's over. No, it's not. So we have to look to the opportunity set that exists now, and that's what we're trying to do, to connect the mine building, community building, nation building, but we've built this company over 6 decades, sort of keeping our head down and not doing a commercial on ourselves. Now we feel a responsibility, given our size and our leadership position, to say, no, mining is good. It does bring benefits. It's not perfect, but no business is perfect. And so we can rebuild, but we have to rebuild with bigger companies working with the junior set, but taking risks. And so we've invested in some new discoveries across the country. We've invested in early stage projects here in Ontario. And it's not just a check we write. We bring our experience to the table, to their board, to say, look, this is how you need to think about it. And so this will benefit the communities. It'll benefit the industry. I agree with the hollowing out in the head office. It's important for big cities to have big companies. It's important for those big companies, particularly in mining, to be able to do things in other parts of the world to get exposure to other metals and other deposits. So we can still do that because we have the basic infrastructure here. But we need the government now, more than ever. Agnico doesn't need the government, but the junior sector needs the government. The communities need the government to build, as we said, that social infrastructure to help improve the chances of building long-term sustainable businesses in these communities that are going to benefit young people and create opportunities in those communities.
I'm going to give the very messianic Mr. Boyd the last word in this discussion today. I want to thank all 4 of you for joining us here on TVO tonight, starting with Mayor Stacey White in Kirkland Lake, Ontario. We're grateful for your participation today. Sean Boyd, Agnico Eagle Mines, Michael Fox, Indigenous Community Engagement, Bruce Tatters, Red Cloud Securities. Thank you so much. Canadian banks have a global reputation as safe, secure institutions with reliable dividends for investors. But our next guest argues federal policies have given the Big Six a dominant position. The result? A lack of real competition amongst them, leading to excessive fees on customers and a risk aversion on loans that adversely affects the Canadian economy at large. Andrew Spence chronicles all this in his new book. It's called Fleeced: Canadians versus Their Banks. And he joins us now for more. Andrew, it's good to meet you. Nice to have you here.
Thank you, Steve.
Okay, don't take this first question as a chippy question. It's not meant to be a chippy question. What qualifies you to write this book?
First of all, I'm a trained economist. Started my career at Her Majesty's Treasury, as it then was, in London. I moved to Canada. I worked for a couple of the Canadian banks, as a matter of fact, as an economist, as well as a couple of the global banks. So I've had a good insider's look across both big global universal banks and the Canadian banks, and then I transitioned to asset management, where I became an owner of the banks. And so I've also had a good look inside from an investor's perspective.
Why does the Bank of Canada describe Canadian banks as, quote, a collusive oligopoly?
Why? Because by definition, there are only 5 to 6 members of the market. And what we know about oligopolies is that they produce at a much higher price and much lower quantities. So that can be quantities of loans, but it can also mean quantity and quality of service, both of which conform to the stylized facts of an oligopoly.
The bankers would tell you there are tons of players in this field. Yes, there are 6 dominant ones, but there are lots of smaller players who play their part. Is that not true?
And who are they? They're not top-of-mind names. In fact, the only way, in some ways, the only way that you can bring competition to an extremely important industry like banks, and they have to be stable, because if they go down, they're going to have catastrophic effects. And so that we have to accept. But there are ways to introduce competition that do not threaten stability. And one of them is the fintech revolution. And so we have been talking about the competition, the potential competition coming from fintechs. We've talked about open banking in Canada, but we have not executed on it, where other jurisdictions have.
Okay, these are groups like Wealthsimple or Simply
Yep.
Financial, new players, new entrants in the
Yep.
field. You don't think that they are kind of taking grasp of the marketplace in the way that they ought to?
So the way you access customers is through the payment system. So this is a very important piece of public infrastructure, and I emphasize it's a piece of public infrastructure, but it's been outsourced to the banks to run. And this has been a serial challenge for the federal government over more than 40 years, because it can act as a castle wall and a moat to keep competition at bay. And so if you want to travel to these fintech providers, you have to go through the banks. And so that makes it difficult for them to break through.
Can you give us some examples of, my suspicion is people don't mind banks making big profits as long as it is not at the expense of their customers. Can you tell us about how they make, I guess in your view, excessive profits at the expense of their customers?
Yeah, I mean, I think the work by research firm North Economics is a great contribution to our understanding of just how pervasive fees are and how they can quickly accumulate. If you bounce a check, for instance, you're going to get charged $45, where that charge might be what, $5?
Cost the bank
$8?
$5.
No. In other jurisdictions.
Oh, I see. Okay.
That take transparency and consumer protection more seriously than we do here in Canada, that charge will be some 1/7 of what we are charged here.
Why is it so high here?
Why? You tell me. I think if you can charge a high fee and nobody complains and nobody calls you out on it, then you're going to do it. Now, banks have a license to print money, literally. So as part of that license, though, they were told they could only print $5 bills. So one day, let's slip in a few 20s. Oh, nobody noticed. How about some 50s? Before you know it, they're printing hundreds. 365 days a year, 7 days a week, 24 hours a day.
Isn't the idea, though, to deter writing bad checks, and it's a pretty good deterrent if you put the NSF fee up there to $45?
Who's most likely to bounce a check? The well-off?
No.
The affluent? Those that pay close attention to their daily fares? Or those who are cash constrained because they are either economically marginal or not yet financially literate?
So it's a tax on the less well-off.
Yeah.
In some respects. Okay.
Yeah.
Let's do, Sheldon, can we do this quote board in the middle of page 1 here? This is a quote from your book here.
Sure.
Let's bring that up. When banks are stingy with credit, the rest of the economy feels it. There is a negative network effect. Businesses can't grow, can't improve their productivity, can't hire more people, can't pay them more, and our living standards decline. Bank financing at current magnitudes is simply insufficient to finance the economic vitality necessary for Canada to have the robust and competitive economy we all covet. Okay, why? This is a direct criticism of how, in your view, banks are not prepared to take somewhat more adventurous risks, and the economy as a whole suffers. Why aren't they?
So investors will reward a bank if its earnings are stable. It will reward a bank through a higher stock price if its risk of loss is low. And the way you've got to think about it is that banks have become increasingly bold in where they apply a fee and how often they apply it. They've driven deposit rates very, very low. But you can't push prices too high. It's okay to make your clients squirm, but don't make them scream, because that just might get their attention, and it might get the attention of regulators. So how are we going to reward the investors for what they want? Well, let's not necessarily push the revenue pedal to the metal, but let's slam the risk brake into the floor. And so where are you most likely to lose money and assess whether or not you're going to get paid back on a loan? Because banks do need to get paid back, and it's small and medium-sized business. If they're not beyond proof of concept, their risk of loss is high. And so the banking system has systematically and serially over a number of years reduced the amount of credit that's provided to this sector. So if you're an entrepreneur, you're not going to get much of a loan from a bank, if anything. They'll tell you, use your credit card, and that's a rate of interest of 20%. In a world where the overnight rate of interest of the Bank of Canada is 4.5%. That's a huge spread, right? And so what happens is the entrepreneur takes all the risk, and in the early days of a business success, who gets all the profit? The bank does.
Is it not fair to say, though, that banks are reflective of the corporate culture in which they operate? And that I think the fact is most Canadian businesses are much more risk averse than, say, their American counterparts.
There is no question.
So they're typical of the economy.
There is no question that Canada is a very conservative country, but that does not mean to say that we have a shortage of entrepreneurs. There is no shortage of ideas. There's no shortage of people that want to build equity in their lives and have some control, but they find it very difficult to get the financing to get going.
If banks were looser with their rules on financing, presumably they would lose more loans, right? Not all the loans would be repaid, and they wouldn't do as well financially. I mean, isn't that just common self-preservation sense?
But in other jurisdictions, there are markers that show that that's perhaps the wrong question. So if we look at the price of credit provided to small businesses, it'll be something like the OECD calculated. It was at 240 basis points on the loan spread over a risk-free rate, and elsewhere in the world it's 45 basis points. So they are pricing people out of the market as well as constraining the credit. Banks in Canada are much more conservative in their credit granting processes than elsewhere. And this is an institutional and cultural issue. But if we look at, the banks are in every single nook and cranny of our economy. Where does innovation and invention take place? It's not taking place in all the big oligopolies in Canada. Data show that their investment in capital equipment that empowers their employees to become more efficient has been falling dramatically since about 2012. They don't invest in efficiency because they don't have to, just as the banks don't invest in the dynamic dimension of our economy because they don't have to.
So if the banks were a little more generous, not overly risky, but a little more generous in the criteria by which they gave out loans, what impact would that have on the Canadian economy?
Many Canadian entrepreneurs simply give up because they can't get financing, or they can't get sufficient financing. I just want to give you one statistic. The Canadian Federation of Independent Business does a survey, regular survey of their members, and the median amount, the halfway point between the lowest amount of credit given and the highest amount, is $156,000 per year. This is for half of Canada's economy and 2/3 of its jobs.
It's a pretty small number.
Right, but the issue is 10 years ago, it was over 200,000. So if you adjust for the inflation we've had and the growth in the economy, that median should be about $360,000 a year, and now we're down to less than 100.
So they are even more risk averse today than they were 10 years ago.
I think so. And look, incentives matter, right? And if you have no incentive to do better, why would you?
How would you introduce more competition into banking in this country?
As I said before, this is not a simple challenge, and it has bedeviled Canadian policymakers for the past 60 years, all the way back to the Porter Commission in 1964, that attempted to introduce more competition into the system. And as Jack Mintz, renowned Canadian economist, observed at the time, in fact, profitability of the banks went up and competition went down, which did earn him some impolite criticism from a bank chairman at the time. So what would you do? We have to think seriously about the fintech route, so that people can look at their app, look at an app on their phone, say, I want to do transaction X, Y, Z, and they tell the app, go find me the cheapest, most efficient place to do this, please. And that will get the bank's attention. And so then they've got to think about, okay, I now have to meet that challenge. And Canadian banks are more than able to make that challenge. They hire and they employ some very talented people. If they're given the right incentive, they will do so.
What's preventing that from happening?
So it's partly the banks dragging their feet, and that's natural, right? Getting an annuity going in business is really hard, so you don't want to lose it. That I understand. We have concerns in this country about our conservative culture. Do I want my information out there for other people to see? There could be security issues with that. And our own plodding, ponderous government policy making, right? So let me give you an example in the UK where open banking emerged the first. In 2016, the UK authorities brought the 9 biggest banks into a room somewhere in Whitehall and said, we are going to introduce open banking in this country. You have 2 years to get yourselves ready. So you guys go away and you talk about all the issues and you hammer out some way to get this done. But make no mistake, this is going to happen. Now, the authorities were not under any illusion that this was going to be easy. So what did they do? Instead of having everybody join hands and sing Kumbaya, so everyone's special interest is satisfied so that we can all move ahead, they assigned an implementation trustee. And the implementation trustee listened to everybody and said, right, we're done. This is what we are going to do. Now, no more whining, no more whinging, no more griping. Let the rubber hit the road.
Whinging is a great British word,
Isn't it just?
Yeah, it's wonderful. I think I remember reading in the book
Yeah.
that you had a conversation with Anita Anand, the president of the Treasury Board.
Yes.
And when the discussion came
Yeah.
to, how do we get a little more competition into banking, her response was something along the lines of, hey, our banks performed extremely well during the subprime crisis.
Yeah.
The recession of 2008.
Yeah.
Our banks are strong. Canadians like them strong,
absolutely.
and we don't need to do what you are suggesting.
I wouldn't say that she didn't say we don't need to do what you're suggesting.
Okay, I overstepped there, did I?
Yeah, I think I talked to her about it, and her first response was, well, yeah, we looked at the banks, but the crisis, we didn't have to deal with that. And I can understand what motivates hesitancy about grasping that issue, right? We avoided the political mayhem of having to, quote, bail out banks.
Our banks did not fail, unlike in the United States.
No, they didn't, but most people don't realize they did receive substantial support from the federal authorities. So it wasn't that we didn't have to support them, but they were not on the verge of collapse. But remember that the banking system in the US got itself into trouble not because it was subject to liberalization and competition. It went under because it was inadequately regulated. Canadian banks were very well regulated at the time. They had high capital requirements relative to Basel. They had limits on leverage. The only place we fell short was the amount of liquidity they had to hold, by which I mean if you get a bill, you need to have cash to pay it. Otherwise, you could be insolvent because you can't get your hands on the cash. So you can have liberalization in your banking system. You can continue to ask for demanding and stringent regulatory requirements that will preserve that stability. Xavier Vives is a Spanish economist that has done exhaustive research on banking systems across the world, and he observes that concentrated markets and concentrated banking systems are not a necessary condition for stability, because the UK banks, the Dutch banks, and the Belgian banks all were concentrated and all had significant problems. Big banks can be more diversified, but if you don't regulate them, they can take a lot more risk. And so there's a trade-off. We've got some aspects of the trade-off, right? But just because the banks survived the crisis in 08, 09 should not give them carte blanche to run wild through the charges that they levy on their customers.
Okay, do you see any appetite at the federal level to either force the banks or deeply encourage the banks to be more competitive?
It's not even ostensibly evident. I think we have in general in, and this is not just in the Canadian economy, but in most industrialized countries that are sort of falling into the Anglo model, is we think we are pro-market, right? But we're not. We're pro-business. What do I mean by that? If you're pro-market, you want to have a fair degree of competition. You want to have people fighting for their customers so that we get the best prices, so that they become efficient. If you end up being pro-business, then you are pro-feather bedding, special interests. I mean, Canadians should be absolutely ashamed of the farm subsidies in this country. So the point is, Steve, wherever you go, there is a pro-business sentiment towards the economy in general, and we are now paying the price for it.
Canadians, I'm going to put to you and you tell me if I'm wrong, Canadians may not necessarily mind that because they hold they hold stock in all of these institutions in their pension funds and so on, and they want them to be very profitable and strong because that's the money we depend on after we retire. How do we deal with that imbalance?
Well, who owns equities in the general scheme of things?
You're going to say better off people versus lower income people.
Of course.
Yeah.
Right?
So
if everybody had access to capital to buy bank stock to compensate them for the fees they were paying, that would be a reasonable argument. But when economists try to estimate, okay, if the stock market goes up, what impact is that going to have on the economy, let's say? The answer is next to nothing, because only about 3% of people own nearly all the equities. The one thing that will make a difference to consumption is if you own a home and the value of the house goes up. That will have a big impact because more people own a house relative to owning equities.
I got to say, I learned a lot reading your book, and it's one of these, you see that, everybody? It's a nice, brisk read.
Exactly. I was going to say, it's a brisk read.
Yeah.
It was written under duress from my publisher and editor, Ken White.
He's a terrible man, isn't he?
He's dreadful.
Yeah.
But he is...
I can confirm that because I've written a book for him as well.
He's extraordinarily skilled. He helped a lot to get the arguments out there. I hope, if you do read this book, I hope you have the ideas, the words, the knowledge, and the concepts to understand the predicament we're in. And now you will have the questions to go and ask your elected representatives.
It's called Fleeced Canadians versus Their Banks, and it has brought Andrew Spence to our studio today. Thanks a lot, Andrew.
Thanks, Steve.
And that is the agenda for Tuesday, October 15th, 2024. Tomorrow on the program, we look at the myths and facts behind attention deficit hyperactivity disorder, ADHD. Hope you'll be with us for that. I'm Steve Paikin. Thanks for watching TVO, for joining us online at tvo.org, and we'll see you again tomorrow.
The Agenda with Steve Paikin is made possible through generous philanthropic contributions from viewers like you. Thank you for supporting TVO's journalism. We are where you are. TVO's current affairs journalism is available across platforms across Ontario, on Roku, Amazon Fire, Apple TV, and more. Catch The Agenda, The Thread, On Poly, and other podcasts, docs, and video series on the device of your choice when you choose.